To the business of real estate. We have among our guests the president of the Massachusetts Association of Realtors, Kevin Sears. And Kevin, thank you very much for joining us. I know that you were at home with your son's baseball game last night?
Yes, my 8-year-old had a Little League game last night.
I see. So. Did they win?
Unfortunately, no, they lost in the bottom of the 7th.
Oh, that's too bad. That's too bad. Well, thank you very much for being here. Now, as we talked about, the $8,000 tax credit has expired, but there is hope that it may be extended a bit. Tell me about the effect of that and what happens if this expires, it's not extended. What do you see in the market?
Well, that's a great question. I'm thrilled to follow Barry. The first thing, though, Barry, I want to mention, when you do make the decision whether you're going to downsize, move to the city, I know a good realtor that can help you.
Okay. Always on duty.
So where were we? In the late summer, early fall of 2008, the financial mess began, and that led to February 2009. The state saw its lowest median price in nearly a decade. The median price had fallen to $225,000 for a typical home. Where have we come since then? We've seen 10 straight months of increased sales numbers, 6 straight months of increased price on those sales. Are we out of it yet? No, but at least we're seeing a normalizing, a stabilizing in the market. The tax credit, you talked about the Senate passing possible extension. Let me clarify. It's for the folks that are currently in the pipeline that had the house that they want to purchase under contract by April 30th. They're supposed to close by June 30th. I can tell you, being out in the street, there is a bottleneck right now. There will be many homes that will not close because the capacity is not there to be able to get them through the pipeline. So what we're hoping is that, and the National Association of Realtors has been very active in lobbying, getting this extension to allow the pipeline, the bottleneck, to ease its way out over the next 90 days. Still needs to be signed by the president. We're keeping our efforts strong down in D.C., but it's not for any new purchasers. It's for folks that are already in the pipeline.
Okay. Now, tell me about inventory. I know that you have mentioned to me that inventory is increasing. It's been increasing for a number of months. Why is that important?
Well, a couple of things. For 23 straight months, we saw inventory declining. That was a good thing. We needed to get that stale inventory off the market. In March, we actually saw our first increase. It was a 2% increase, but it was still an increase. April, we saw about a 6% increase. We're up to about 30,000 homes on the market in the Commonwealth. It's a good thing because it shows that sellers are gaining confidence in the market. The tax credit worked, folks. It did its job. It stimulated the housing sector. When you look at the entire bailout package, the tax credit was a fraction of what the government has spent. It's going to total about $16 to $20 billion. It's a very large number. But when it comes down to it, the $6,500 or $8,000 tax credit, it came back onto Main Street probably about 6 or 7-fold. They say that the typical transaction pumps about $57,000 into the local economy.
Now, looking at affordability, the whole issue of affordability in the state, and much has been written about whether or not people can find homes that are affordable, and we keep broadcasting, I keep broadcasting every month, the median sales price is starting to increase. Tell me about affordability, the median price, and if people can find affordable homes there.
Well, it all depends on where they're looking. The median price for the state as of April 2010 increased about 7%, up to $295,000. That's year over year compared to April of last year. I can tell you in my market, I'm in Springfield, my metro area, our median sales price is $180,000. In the Boston metro, the median sales price is $440,000. So there's a big difference, and it depends on what sacrifices the folks are willing to make in order to get a lower priced home or an affordable home. But they are out there.
Now, tell me about foreclosed homes. Obviously, we've had lots of foreclosed homes in the pipeline. The numbers of foreclosing filings is starting to increase, but how is that affecting home sales, selling prices, and the numbers of homes that are on the market?
About 2 years ago, we saw a glut of foreclosures on investment properties, multifamily homes that were being foreclosed on. The investors just walked away. That inventory is starting to clear out a little bit. And so for the multifamilies, I can tell you that the prices have dropped dramatically. When you have bank-owned properties, foreclosed properties on the market, it significantly impacts fair market properties. The next wave that we're expecting, and I was happy to hear Barry say that we had 30,000 new jobs since the beginning of the year. The next wave that we're expecting is going to be the single-family market based on unemployment. Unfortunately, we're seeing working families, or not working families, formerly working families, who are in the situation where they're losing their home. And that will have an impact on the sales market. They say that if you have a foreclosed home on your street, you lose about 7% of your value. So if you have a glut of foreclosures, that could have a significant impact on prices. What we're hoping is that it will be more of a slow and steady stream into the market rather than just all at once.
Okay, thank you very much.
Thank you.
We're going to move on to Tony Green. Tony is a managing partner at the Pine Hills. The Pine Hills is a community that covers about 3,200 acres. And he has been past chairman of the Neighborhood Development Council at the Urban Land Institute, also a visiting lecturer at MIT, Harvard, Tufts, and maybe soon to be Northeastern, I'm not sure. We'll work on that. Pine Hills has won numerous awards for site planning, its use of open space, its environmentally sensitive design and smart growth, and we are very pleased to welcome you here this morning. Tony, thank you. You're there. You're selling homes. You're developing. Has this market hit bottom in your view?
Well, from our experience, we actually sold more homes last year than we did the year before, and we are on exactly the same pace so far again this year. I guess the best harbinger, besides, because a few sales is not necessarily proof, is that our traffic is up gigantically, and home sales follow that kind of interest, and that's a pretty good sign to me that things are about to change. And of course, the dilemma always is people want to make sure that they can buy at the bottom, but the proof that the bottom's been passed is that prices are up, which they are. So timing the market is a difficult task, and the only way you can be sure is when you actually are paying more.
Yeah, tell Wall Street investors about that as well, timing the market. Yes, it's a losing proposition. Tell me also, when you faced the economic downturn in 2006 and 2007, what was your reaction? What could you do proactively to change what you sell, how you develop property, how you market with Pine Hills?
Well, I think the market tells you things, and when home sales in 2006 were lower than they were in 2005, we meet with all of our builders. There are 9 different home builders at the Pine Hills, each building a different kind of home for a different market niche and a wide range of price from 300,000s to 2 million. So broad price area. And our first discussion was about that the ways to maintain value are to be more careful and more conservative. So therefore build fewer homes that are not yet sold. And frankly, most of our business was built to suit, and now all of our business is built to suit. So that there's little out there for standing inventory. There's nothing that creates pressure on price like an empty house, and we don't have any. The second thing is that the market's really telling you that this is the best time to make a change. And we met with all of our builders to discuss making changes. And indeed, we have 3 new, everybody changed their product in some way. We have 3 builders who are entirely new product, all opening actually this spring. New builder Toll Brothers with their distinctive home style. The Green Company building courtyard homes, attached condominium ownership, but focused around an internal court that's outside, but open to the inside of the house. And then on 2 new cottage neighborhoods where the homes are reminiscent of the kinds of cottages you might have seen on the islands. Smaller lots, can walk to the village center where the supermarket and the cafe and the post office and all those things are. Those kinds of, 2 years ago, one couldn't have bought those houses. They didn't exist. So that there are new choices out there. They're a little bit smaller. They have the ability for the buyer to make choices about adding more things to the house, but they could be a little bit more economical if that's what they'd like to do.
Have you heard that from other builders as well, that home design is actually changing in response to economic conditions?
Well, I think that one has to be has to understand exactly what the marketplace wants in order to make that decision. And the way in which we went about that is the simple way is we get a lot of traffic and we ask people to come in and join us for breakfast. We do it a number of times and tell us what they want, and that helped us design these 3 different choices differently than we might have had we not asked people first.
Excellent. Tony, thank you so much. Have much more. Joining us also is John Spence from MarketWatch.com, Boston-based reporter, and also a first-time home buyer. John bought your first home when, this past fall?
About a year ago.
About a year ago. Well, you happy? You made the right choice?
I'm not sure. I think we may have waited a little bit longer, but...
Trying to time the bottom, right?
Yeah, I think, as I said, we would probably waited a little bit longer, but you just get to a point where you're ready and ready to start a family and everything. But I may have waited if we had that flexibility, honestly.
Yes. Now, John, I know you have seen this market from both sides, as a first-time buyer, as a reporter, a person interviewing all the real estate professionals. Now, what have you found in the local market? What are some of your observations of what's really going on here as far as prices, availability, a lot of people being underwater, owing more on their mortgages now than what their homes are worth?
Right, that's a tough psychological place to be in. But rather than, I think we should just leverage the expertise we have up here on the stage, and I'd rather ask some questions actually than just talk. And I'd like to ask the panelists how the key spring selling season has been going. What are the early returns there? And also, you see stories that first-time buyer segment is really driving the market. Is that the case here in the local Boston area?
I'm happy to take that one, Anthony. The spring market has been phenomenal. What we've seen year over year is, on a statewide, about a 46% increase in the number of sales, as well as I said, about a 7.5% increase in sales price. So yes, the market has been a very strong market, and we're very fortunate and glad to have had the tax credit to help get that along. There is one other thing I want to point out, and I didn't mention this in my earlier comments. We had a little bit of a perfect storm here with the market. We had affordability, we had the tax credit, and we had historic low interest rates. They were hovering between 5% and 6% right now because of and Barry can speak to this better, I'm sure, but because of the financial crisis in Europe and what's happened to the euro, our interest rates have gone down again, and you can get 30-year money at about 5%. So it's a real good time to get into the market.
How long will these mortgage rates stay this low, Barry? What do you think?
Well, they'll stay this low, I think, for much of this year. The problem, of course, that people worry about is the huge debt we have, both at the federal debt, the fact that consumers still have a lot of debt, and of course we have a debt crisis worldwide. And when you have that, there's a tendency for interest rates to rise. And so I would think that, again, if you're talking about timing the market, this spring, this summer, is probably the finest time you could buy a home here in Greater Boston or throughout Massachusetts.
Barry, could you say that again?
2 times.
Buy now, okay?
Thank you very much, and good morning.
But because I do think that we've seen the bottom, if you have clients who are thinking about waiting a little longer, I think they're probably going to make a mistake. This combination, Kevin, that you talk about of affordability, low interest rates, is something that comes along only once in a while. And when they do, it's a good time to take advantage of.